What is loan-to-value, LTV? Have you ever wondered how banks and credit unions decide if you qualify for a loan? One key factor they consider is the loan-to-value ratio, often referred to as LTV. Understanding this concept can help you navigate personal loans and their eligibility requirements more effectively. The loan-to-value ratio is a financial measurement that compares the amount you want to borrow to the value of the asset you are using as collateral. This ratio is usually expressed as a percentage. To calculate LTV, you divide the loan amount by the value of the asset and then multiply by 100. For example, if you are borrowing $80,000 to purchase a home valued at $100,000, your LTV ratio would be 80%. Lenders use the LTV ratio to assess risk. A lower LTV ratio indicates that you have more equity in the asset, which means less risk for the lender. Conversely, a higher LTV ratio suggests that you are financing a larger portion of the asset's value, which increases risk. This can lead to higher interest rates or the requirement for mortgage insurance. When it comes to personal finance, especially with secured loans, understanding LTV is essential. For instance, when applying for a mortgage, a lower LTV ratio can result in better loan terms, such as lower interest rates. Lenders feel more secure when you have more equity in the property. LTV is primarily relevant for secured loans, which are backed by assets like homes or cars. These loans generally offer more favorable terms compared to unsecured loans, which do not have collateral and carry higher risk for lenders. From the perspective of banks and credit unions, the LTV ratio is a significant factor in determining your loan eligibility. Applicants with lower LTV ratios are often seen as less risky, which can influence not just whether your loan is approved, but also the interest rate and other terms you receive. In summary, the loan-to-value ratio is a vital tool for lenders to evaluate risk and set loan terms. It directly impacts the financial conditions of secured loans, making it an important consideration for both lenders and borrowers alike. Understanding LTV can help you make informed decisions when seeking personal loans and navigating the lending process.